A major tech sell-off in the making, but the Nasdaq off its lows this session. Chips in focus yet again, along with Iran and oil. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-hosts Taylor Riggs, Marcus Lemonis, Jackie DeAngelis, and with us for this hour, Heritage Foundation President Kevin Roberts. Chip stocks, semiconductors selling off. A bad week ending on a down note. Investors rethinking the payoff from the massive AI spending boom. Is the spending boom losing a little bit of juice? That's what's at play here. All of this unfolding as President Trump's Hormuz blockade, squeezing Iran's economy, driving oil prices to the plus side at $81.50 a barrel on West Texas Intermediate. That is leaving investors trying to navigate a market and trying to avoid getting hit from both a reckoning on AI and a widening Middle East conflict. Taylor, just to you first.
Yeah.
What are you focusing on most here?
This overnight news that these open source models are maybe catching up with our U.S. closed source models. And why we care, because this sounds wonky. Open source models are cheaper. So if I'm a tech CFO and I have a finite budget, and I can do with a cheap Chinese model for half the price what my Anthropic or my OpenAI model can do, I might do that because it's cheaper and it saves me models. So let's get into it. At the World AI Conference taking place in Shanghai, Moonshot said that their Kimi K3 model is as good as OpenAI and Anthropic. Open Router says that these Chinese AI models are now using 60% of weekly token market share by U.S. companies. So that is proof, in part, that U.S. companies, as they're managing their budget, are thinking about how do I allocate some of the cheap money to these cheap open source models. So that model, K3, is now ranked #1 on the front-end code arena. It's above Claude Fable 5. On Artificial Analysis Intelligence Index, they have it ranked lower at #3, just behind Fable 5 and OpenAI's GPT 5.6 Soul model, but they're putting that ahead of Claude Opus 4.8, and that was just released in May. So again, as we're thinking about the horse race, spend a finite budget, I get a little bit worried as we shift to open source cheap AI. It'll save us money, but what are going to be the costs in the long run? The costs, as you see in the market, the SOX index rallied 105% from March to June. We're now officially in a bear market. We're down more than 20% from that June peak on the SOX index. Companies like Marvell and Intel are now down more than 30% from their highs. So this is a market, I think, that's trying to figure out where do we go from here?
I think we can oversimplify it a little bit, right? Here, in this particular model.
Well, I just wanted to say this conference is Communist China. And I mentioned this new open weights model to someone this morning, and they went, oh, this is from a communist Chinese company, and they laughed. And it's not that open weights models, and Gemma from Google is an open source model as well, they should be dismissed. But anything that China wants us to think that they are ahead, even when they 2 days ago were not. I mean, they're very close behind, but not ahead.
The worry that I have is that in the boardrooms and in the CFO offices, when they're thinking about how they're going to deploy their capital and the cost of using all these tokens, there are going to be a lot of people that are going to say, China, US, I don't really care. I need to deliver a product. I need to run my business. I need to build systems, and I need to do it less expensively. And when people are looking at their balance sheet and are looking at their P&L for the next several quarters, investors are starting to ask, have you started to factor in how AI usage in your business is going to affect the EPS, is going to affect your CapEx, is going to affect all those things? And so this idea that we want to just slough it off is a real problem, because the loyalty is going to be to the dollar, not to the country that it comes from.
Kevin, you want to get in here, or Jackie? Because I cannot believe that, given these companies got their asses stolen from them by communist China over the last 3 decades, and they're going to make the same mistake again.
When they're living quarter to quarter every 3-month earnings cycle, my fear is they will.
Well, watch and get your stock done. I'm not joking.
No, to your point, I'm worried about the reality that Marcus is outlining. I talked to, at least for me in my network, professional network, someone who I think is the greatest AI expert, works in the field, and we lean on his advice at Heritage. And I said, is this a Sputnik moment? When I woke up this morning to this news about the Kimi K3. And he said, not quite, because what's going to happen, in spite of the reality of what Marcus is saying in terms of CFO decisions, boardroom decisions, is that American technology will zoom back ahead. But the real problem, I think this is the real underlying worry, which goes to Dagan's point, is that he said the architecture of this new Chinese open source model is so similar to Claude that in some of these third-party analyses, they seem to be the same object, the same issue, and or same product. The problem with that is it shows the extent to which the Chinese have stolen our intellectual property. That's my worry moving forward, on top of the market sell-off, on top of the reality of boardrooms, which Marcus knows well. I think that's the kind of thing where the Trump administration and Congress really need to step in here and provide a regulatory framework for American AI companies to zoom back ahead, but to continue to attack that intellectual property theft.
Well, I just wanted to note, because this was a research report, that as of just a few days ago, the Epoch Capabilities Index, the open weight models trailed the closed weight frontier models by 4 months. Go ahead, Jackie.
I just was going to say on this China piece, before I get to my larger sort of tech analysis, obviously the president gave an address last night to the nation. And he was talking about China, and he was talking about the 2020 election. Some of his claims were not verified, but he was saying that they had a role in it. And so I just think that China, with intellectual property, it's something that we need to think about, and it's something that he's been focused on with respect to his tariff policy, how he deals with China, his foreign policy altogether. If you're in the AI trade, you need to be braced for volatility, and that is something that I think some investors are familiar with, some investors are not. But Taylor, you call this a horse race. A horse race, you're going to see one horse ahead. Another horse is going to pull ahead. The race is long. And so if you can't handle the fact that there's competition out there, because whether it's coming domestically here from other companies against themselves, or it's coming from another country, there's always going to be competition. And so you're going to see possibly China gain an edge or be nipping at our heels. But then you'll see the American companies pull ahead. And if that's not volatility or something that you can handle, then you really shouldn't be in this trade. Overall, because of the idea that this is developing and they're going to compete against each other in this way, I'm not really worried about it, especially when the SOX has moved that much. And we had the chipboard up before. I mean, you see a stock like Intel was trading over 120, now it's in the 90s. NVIDIA has pulled back a lot from its all-time high. I think it was 232 after the competition. But having said that, it's not a trade for the faint of heart. So people who are doing this need to think about, am I in it for the long term? Do I believe we're still in the early innings? Do I believe that the company that I've chosen ultimately will be the winner? I mean, these are some of the questions that you have to ask yourself, but I don't see any of this deciding what the spend is going to be. Do we pull it back? Do we move forward based on everything that's happening? How do we even integrate all of this stuff into our company? How are we using it? Maybe we're using too much. Maybe we need to shift a little bit. I think this is all par for the course.
The concern that I have is that in addition to understanding what you're going to use, it's the conflicts that exist in these local towns where these facilities need to be built to allow for storage and for data clouds and all these things to happen. And you're seeing that a big chunk of the population is now saying, no, thank you in my backyard. I want the product. I don't want it in my backyard. And so as that continues to resonate, I don't know how much friction. I think the other piece is a lot of investors, and the volatility could be part of it, a lot of investors are saying, where's my return on my cash? I don't see my return on my cash. I see money leaving, and I see other countries and other companies doing things that cost a fraction of that. Do you know what you're doing? Am I going to just get out until you figure it out? And that, for me, is where the volatility may come from.
This sell-off, I would argue, is related to the data center spend and the slowdown in the data center build out, less so China, given the fact of the growing backlash against the AI build out. And I mentioned this yesterday, it's not NIMBY, it's not in my backyard, it's really a deep-rooted hatred of big tech that a lot of this is coming out of. And it's also, and I will quote a tech executive I talked to this morning who said, I don't think people have come to terms with what it meant that Anthropic's Fable 5 release was blocked for 3 weeks by the Trump administration, which allowed OpenAI to get ahead, but also allowed China to get ahead. That the Anthropic was ahead. These things, these models build on themselves. And Anthropic's own employees, the company's R&D was essentially shut down for 3 weeks. That the company's own employees could not use that model. And we, as a nation, cannot make these mistakes ever again. And so you talk about Washington, the less Washington, the better. What were you going to say?
The price action we see is eerily similar to what we had after the March quarterly earnings. Micron had blowout numbers, and in the following weeks after that March quarter, they fell 30%. You saw the same with TSMC this week, where they have great numbers and the market just doesn't care. The market wants out. Now, is that profit taking? Is it a rotation? If we're thinking about software, is it a valuation call? I think, Jackie, to your point, it's not a I'm out of this stock forever. It's I'm going to pull back in the meantime. And then we saw what happened to Micron after that March quarter. It then ran up to $1,200 a share from $800. And I think we're sort of back in that where after earnings, you get a little bit of a break, and then it certainly does not mean that it can't rally further from there.
To Dagan's point, though, 3 weeks is a lifetime
It
in
is.
this business.
It is.
It's a lifetime.
They turn the lights off on companies that
Put 'em out
were
of business.
using that model
Yeah.
on a Friday night.
Yep.
You need a good stomach to be in this trade.
No, but not the trade, but these are companies that were using the model to who had basically set build outs over the weekend, and you leave on a Friday and come back and your work didn't get done.
Yeah.
Things like that are going to happen.
But
She doesn't want the government to do it.
Should or shouldn't.
They shouldn't because
But they
of a
happen.
switch or an edict coming out of the White House. That's my point.
I hear you.